Yes, a very good afternoon. Right, so yesterday we first completed with the 500 series, yes, in which we studied SA 570, which is regarding going concern, yes, a fundamental accounting assumption used in the preparation of financial statements. And what was the first sentence for the auditor, for the answer which we studied? The auditor has the responsibility to obtain sufficient appropriate audit evidence about the appropriateness of the management's use of going concern assumption in the preparation and presentation of financial statements, and whether any material uncertainty exists because of which the auditor may have a significant doubt about the entity's ability to continue as a going concern. And then we said, as there are events or conditions which cast a significant doubt on the entity's ability to continue as a going concern, it may not be able to realize its assets and discharge its liabilities in the normal course of business. As an auditor, we should ask the management to make the adequate disclosures in the financial statements and also refer to them in our audit report. However, if the management refuses to make the adequate disclosures in the financial statements, then the auditor shall issue a qualified opinion or an adverse opinion as may be appropriate. Right, so these were the three common sentences which we saw. Then after that in SA 550, first we talked about the risk assessment procedures. Make inquiries of the management. Have they performed or are they yet to perform the assessment of going concern? And also you as an auditor remain alert throughout the audit to check whether there are any events or conditions because of which you may doubt the going concern. And here we studied the financial indications, the operating indications, and the other indications of going concern. Then if there is any event or condition because of which you may doubt the going concern, then in that case, what are the additional procedures to be performed by the auditor when events and conditions have been identified because of which you doubt the going concern assumption? Events or conditions have been identified. So what are the additional procedures? We said all the audit procedures of SA 560, subsequent events. Read the latest minutes of the meeting, budgets, cash flow forecasts, interim financial statements, position of legal cases, all the audit procedures for subsequent event, all the inquiries of the management regarding subsequent events. Then if management has not yet performed the assessment of going concern, we shall request the management to perform the assessment. We will also check what are the future plans of the management. Yes, and also the feasibility of those plans. What could be the future plans of the management? To liquidate assets, to reduce or delay expenditure, to borrow money, to restructure debt, to increase ownership equity. Then we will also take the prospective financial information, the forecast from the client. We will also check the data, the reliability of the data, whether the assumptions are adequate. And we shall also obtain the written representations from the management. And then last one, we came to the going concern and the audit report. And a going concern assumption is appropriate, unmodified opinion. Second, going concern assumption is questionable but resolved by management explanation. Again, unmodified with a material uncertainty related to going concern paragraph. After the opinion and the basis for opinion paragraph. Going concern questionable and management disclosures also found to be inadequate, then qualified or adverse depending upon the pervasiveness. And if going concern assumption is inappropriate, in that case it would be an adverse opinion. Right, so very important standard. We've seen in the case studies, 10 questions have been there, from RTP suggested put together. Right, then after that, and the last standard in the 500 series was SA 580, written representations, which is not a substitute for the normal audit procedures to be performed by the auditor. Then it is mainly to be used as a corroborative audit evidence, that is, it should be reasonable and consistent with the other audit evidence available. Then the person giving the representation on behalf of the management should be well informed of the matter, and where it is a matter of intention, in that case representation is the only evidence available with the auditor. Right. Then we said contents of written representation. Have you fulfilled the preconditions acknowledged in the terms of engagement? And second, the representations required by the other standards on auditing. Then management's refusal to provide the written representations to the auditor, DD. Doubts regarding the integrity of the management, and second, first you will discuss the matter with the management, and second you will also have doubts regarding the integrity of the management, and as they are not giving you written representation, it may also be considered as a limitation on scope, and then modify opinion in accordance with 705. Next one, reliability of written representations. Here we said II. Doubts regarding the integrity of the ethical values, diligence of the management. You will also doubt the reliability of the written representations. And second, if whatever they have given in the representation is inconsistent with the other audit evidence available, first you will attempt to resolve the inconsistency. However, if it remains unresolved, then again you may conclude that written representations are not reliable and the impact will come on the auditor's report. Date of written representation as near as practicable but not after the date of the audit report. Period, the period covered by the auditor's opinion. And what if there is a change in management during this period? It does not diminish the responsibility of the current management to provide the representation for the whole of the relevant period. Right. Then after that we came to the two standards in the 700 series, SA 710 and SA 720. Yes, 710, comparative information, corresponding figures and comparative financial statements. Corresponding figures where only previous year figures are given, the auditor's opinion is only for the current period. Comparative financial statements where entire previous year set of financial statements is given and the auditor's opinion is for all the periods. Right now, Indian company Schedule 3 requirement is corresponding figures. Right. Then what are the procedures which you need to perform for this comparative information? One, agree the balances with the prior period. है ना? Current year financial statements, previous year column, and last year financial statements, current year column. You need to tick tock. Agree the balances with the prior period. Check whether accounting policies have been consistently applied. Any misstatement in the comparative information not reported, for that follow SA 560 and obtain written representations from the management including for any prior period items. Then after that we talked about the reporting on comparative. Yes, and two possibilities, corresponding figures and comparative financial statements. Corresponding figures, last year there was a misstatement and it was reported and it was not reported. And underreported, we say two things, it is resolved, it is not resolved. If it is resolved, no need to mention about it in the current year report. However, it is not resolved, then modify the current report. Last year there was a misstatement but you did not report it last year, modify current opinion with respect to corresponding figure. Prior period was audited by predecessor auditor, other matter paragraph. Okay, prior period has been audited by predecessor auditor, type of opinion and the date of report. And prior period unaudited, again other matter paragraph, that prior period figures are unaudited. Comparative financial statements, there is a difference in your opinion as compared to prior period. Reasons to be given in the other matter paragraph. Prior period audited by predecessor auditor, again other matter paragraph. And if you think that the opinion of the previous auditor is not right, he should have issued another report. So the auditor shall inform the management. The current auditor will inform the management. The management will inform the predecessor auditor and then he shall follow SA 560. And again prior period unaudited, then again other matter paragraph. Then we came to the last one in the 700 series, SA 720. The auditor's responsibility in relation to other information. It talks about other information in documents containing the audited financial statements. So we said contents of annual report minus financial statements is equal to other information. And what did we say? Whatever is the financial information in the other information, is it consistent with the financial statements? And for that, auditor, you need to read the other information, preferably before the date of audit report, otherwise as soon as practicable. Why do you want to read it? To check the consistency. And what if there is an inconsistency? Then you need to decide what requires revision. And then we developed a chart. We read the other information before the date of the report, after the date of the report. In both cases, inconsistency identified, and in that case you need to decide what requires revision. And then two possibilities. Revision of financial statements is necessary, revision of other information is necessary. Revision of audited financial statements is necessary, revision of other information is necessary. Revision of financial statements is necessary, management does not agree, modify opinion in accordance with 705. Revision of other information is necessary, management does not agree, communicate to TCWG, other matter paragraph, or withdraw from the engagement. Revision of audited financial statements is necessary, follow SA 560, facts that become known to the auditor after the date of the auditor's report. And revision of other information is necessary. If management agrees, then ensure that they've done the revision. And if management does not agree, then notify those charged with governance. Right. Yes, so this is up to what we have already completed yesterday. And we did